You're listening to NDOI, America's Insurance Talent Showcase.
Today's podcast is sponsored by Chubb Group of Insurance Companies, Zurich Insurance, CompZone, and Succeed Management Solutions.
So many people absolutely hate workers' comp.
Hate.
They do. I love workers' compensation.
Me too. But it might just be you and me.
It might be.
It feels that way some days.
It absolutely it does. But I love it because it's the one coverage that employers and brokers can do the most with and can get the most authentic result out of.
Do you mind if we talk a little bit just about what workers' compensation is, just in case someone needs to have a little bit of background on it? So workers' compensation is a mandatory coverage if you have employees, and it's a system designed to deliver benefits to your employees in the case if they are ever unfortunately injured on the job. It provides medical benefits, wage replacement benefits if they're unable to come to work, permanent disability benefits. God forbid someone actually passes away. There's even death benefits. So it's really a social pact. And it's a social pact between the employees, the workforce, and the employers. And
what do you mean by social pact?
So the pact is basically that the employers agree to pay for and provide a systemic bunch of benefits, so medical, wage replacement, and so on. In return, the employees agree that their sole remedy if they're injured on the job has to happen within the workers' compensation system. So it, not 100%, but it prevents litigation. So the employers know that if someone's injured on the job, unless they're grossly negligent, that workers' compensation and their workers' compensation carrier are going to take care of the injury.
Okay, but you're saying it prevents litigation, but I think a lot of people out there would say, are you kidding me?
Yeah.
There's a lot of litigation
Right,
out
but
there.
that litigation happens between the employee and their representative, their attorney, and the carrier and their representative, as opposed to the employer having to defend themselves directly.
So for me, the reason that workers' comp gets turned upside down so much is because people are working so hard to do things to lower the cost when actually those things are making the cost go up.
So true. It's so true. Before I continue that, I want to throw in a little bit of a fun fact. People don't know, but actually you can trace the roots of workers' compensation to the days of piracy. So if you think about it, Redbeard, Captain Hook, if one of their pirates actually was injured, they had to compensate them. So if you lost an arm in a sword fight, they actually had a prescribed amount of money that had to be given to that pirate.
Well,
So fortunately, we've come a long way since then.
Although I think some people still think
we're there.
in the time of piracy. Yeah, absolutely.
They feel like they're the victims of the piracy.
Yeah.
It's true.
Yeah.
It's true.
Because here you're for example, you're expecting your managers and supervisors to control workers' comp claims. And yet, how those managers and supervisors manage people, I mean, if somebody loves their boss and they get injured, they're going to do everything they can to get back. If they feel like they don't like their boss or their boss is a boss and doesn't get them, then they're going to do everything they can to stay out of work. Interesting thing, again, everybody's working really hard to get the rates on workers' compensation shopped and really low.
Oh gosh, such a mistake.
Right. And how frustrating is it that, I'm thinking, get me the cheapest rates and you get me the cheapest rates. And now my rates are going up and up and up. And I'm mad at my agent when the reality is I've got this culture-based organic thing happening that is just driving up my costs. I feel completely helpless.
Well, if that's your strategy, you are helpless. And I hate to say that, but the truth is, in this world, if you buy cheap, you will end up getting cheap in return. And there's nothing wrong with that, but you have to know what you're getting. And if your strategy to reduce your workers' compensation is to bid each year and just go to the lowest price workers' compensation carrier option, the sad truth, and it is sad, but the sad truth is you're going to end up paying more. It sounds counterintuitive, but that's going to be the result.
And that's what happens in it.
All the
it
time.
makes people mad at insurance people.
It does. But I actually blame insurance people for that.
Why?
It's our job to articulate why that's not a good strategy. And we don't do it. And I think it's really tempting in the moment for that producer or that agency to pursue the bid approach because it gets them that business. But it's a really short-sighted strategy, don't you think?
Well, But then what they're also thinking is, well, the carrier, the insurance carrier, is going to provide all the services that's going to take care of keeping claims down. I think that's a really big mistake as well.
Huge.
I mean, the carriers are really important, but to expect that the carrier from the outside is going to have some kind of magic dust to stop something that's systemically happening.
If this were Disney, that would be the case. But in the real world, it's not. Look, if you're a carrier, you do your best. Certainly the carriers want to have profitable business. So, their goal certainly is to provide care to injured workers, with a secondary goal of making sure that the accounts that they provide coverage for are profitable for them.
This is what I see. I see that we bring adjusters out to meet with clients to talk about the claims as a way to prove that we are doing something to lower the cost.
All the time.
Right? And they get out there and it's a setup because the adjuster is sitting there saying, well, this is what's happening with the claims. I can guarantee it. There's something in that the insured is not going to like. And they're frustrated, they're mad, and they're beating on the adjuster. And then everybody's walking away feeling helpless, like, well, what the heck did we have that meeting for? And it's not to throw any carrier under the bus.
Not at all. They do a tremendous job.
They do. They do a tremendous job. It's just that when you put people on the spot at any given moment in time to create some outcome when they've already been working on the claims, it's a setup.
It's a setup. Most thankless job in our industry, claim adjuster. Brutal job.
It's a brutal job.
Like being a dentist, right? You can be a claim adjuster, but if you go to the dentist and you've just had a crown put in, you just had a cavity taken care of, the dentist and their team could have done a great job, but you're probably not giving high fives on the way out, right? Because it was pretty miserable. No one really likes what you're doing, neither the employee nor the employer. Really tough job. I have a lot of admiration for those people.
Well, so it's very similar on the doctor side.
Yeah.
Okay, so it's really, we're letting the doctors handle it. So somebody gets injured, we send them to the doctor, or worse, we send them to the emergency room. And we're saying, well, the doctor will send him back when he can come back to work or she can come back. But again, we're doing that because we think that's going to help keep our costs down.
It's funny. I love this analogy. It's kind of like putting it all on the doctor, but you eat Big Macs every day. Right? And then saying it's his fault because my heart condition is getting worse. Right. You actually have to be an active participant in this.
Exactly right. But that's, again, the same thing we do. We throw it into the medical community, which, of course, when you send somebody into the medical community, they have to do things to people because that's what they do.
That's what they do.
Again, nothing against doctors.
No, it's what they do. It's what they're supposed to do.
Exactly. So there's this level of knowledge of we need to make sure we have appropriate level of care. If something's a first aid, that it really is being handled as a first aid, that it's, if it's emergency. I mean, what is an emergency? I learned that actually many years in this business. I learned just a few years ago, what is really an emergency? Somebody's unconscious or you can't stop bleeding or it's, broken, protruding bones.
Well, for that matter, what is I bet a lot of people don't even know what a first aid is in terms of workers' compensation. What can be considered a first aid claim? They're probably, more than likely sending in all of their injuries and they're reporting the carrier, which they should, and they're letting the carrier pay the bills. And they think that's a really strong solution. They're probably never exploring the prospect that certainly in California and a lot of other states, if the injury is very minor, it's possible that you as the employer can pay those bills directly. And while it may seem counterintuitive to think that you're saving money by paying out of pocket, actually you're saving a lot of money because each one of those claims is going to enter your XMOD formula. I guess I should explain that in a second, but let me touch on that for a second. It's going to enter your XMOD formula for 3 consecutive years. It's going to be included in your loss runs probably for 5 years for marketing purposes. And you're going to actually end up paying multiple times the cost of that claim in your premium. By the way, an XMOD is just a metric, a benchmark figure that compares your business to other businesses in your state in terms of how many claims you're having and how expensive they are.
I just was in at a very large business that their mandate was send every injury, no matter how big, how small, into workers' comp.
Oh, gosh.
With the idea that's what we buy insurance for. not recognizing that it's really it's not just insurance. This is really a financing mechanism.
Absolutely.
That's what workers' comp is. It's a financing mechanism to help you manage injury cost over time. But people don't see it like that. Again, it's that, what's my bid this year?
Such a mistake. Such a mistake. And the truth is, you know who's going to pay for that? The employer. Yes, clearly workers' compensation is purchased and it is intended for and is there for to take care of when your employees get injured. But you do want to take control of that as much as possible. You do need to submit all injuries, clearly, but there are certain techniques that every employer, with hopefully the guidance of their broker and their carrier, are taking to minimize their out-of-pocket costs.
So we're talking about what are things that people do thinking that they're lowering costs, but actually makes it more expensive. So a couple of other things. One of them was discouraging people from filing workers' comp claims or having incentive plans that reward people for not making injuries.
Huge mistakes. Also, arguably highly unethical. You absolutely cannot discourage someone from filing a claim if they're injured. OSHA's really clear on that. So your safety incentive program cannot be seen to be encouraging someone not to report when they're injured.
Well, not to mention the fact that if somebody is hurting, that it's better to really figure it out when they first think they might be hurting rather than say, don't. I actually had that happen in a manufacturing company where I was watching people do stretches in the company. And as they were doing stretches, their face was, ow, like those people are hurting. And the supervisor said to me, don't worry, they won't make a workers' comp claim.
Which of course made you worry 10 times as much.
I said, why won't they make a workers' comp claim? Because we don't allow it. We tell them, put it all in your medical insurance.
Wow.
And actually that business is no longer in business.
I am so not surprised to hear that.
Yeah.
Because that was probably just a symptom of probably a larger cultural issue within that company. It's a big symptom.
Yeah.
But that's awful.
But that's, really, yeah. So another thought that I have that comes to my mind, I'm sure you've got a million more, but is assigning safety to specific people. So where you say, okay, this is our safety person.
As opposed to making it just an integral part of the entire company's culture and the way that they do things.
Yeah.
Huge mistake. Wouldn't you agree? Safety is everyone's responsibility, from the person who picks up the phone to the person who works on the machine.
But we
all the way
say
up to
that,
ownership.
but people don't, it's not in their being. It's not in their culture oftentimes.
It needs to be. It's such a mistake to assign two people and assume that they're going to, be the safety police in your company. Everyone operating a piece of equipment, everyone driving a car for you needs to understand that for them to do their job well is exactly the same thing for them as doing it safely. If you pick up a new piece of business, if you make a great piece of equipment and someone gets hurt along the way, that is not a job done well.
Yeah.
It has to be that way. You'll find if you don't do that, you can make a lot of top line revenue. Perhaps you're putting out a lot more equipment because you're cutting corners. You're just going to bleed that money out on the insurance side. Maybe even on the employment practices, maybe you'll end up getting sued. Maybe OSHA will be coming to your door. Huge pitfalls there. Bad idea.
Yeah, no, I get that. So one of the things that came up when we were talking about this whole topic of workers' comp and how to bring the value other than a bid, thought came to my mind is many insurance agents don't have a giant brokerage that has all sorts of loss control services and claims adjusters and people that can support. So
most don't. The independent insurance segment of the industry is huge. It's huge. Most don't. Most are left up to their own devices.
So some years ago, makes me think of this story, but some years ago, there was a real estate kind of guru that did sort of a nothing down program.
Okay.
And he said, drop me in any city in the United States, give me $50 in my wallet.
$50.
Yeah, $50. And within, I don't know whether it was 24 hours or 48 hours, whatever, I will buy a piece of real estate with nothing down.
Amazing.
Yeah.
Was he able to do this?
He did. He actually was able to do it. But the other day, I thought to myself, that's perfect for this kind of a conversation. What would happen if somebody dropped us in the middle of a big city and I probably need more than $50 in my pocket.
Hey, if we're
just
talking
for
New York or
lunch.
San Francisco,
Yeah,
we
just for
couldn't even
lunch.
get in a cab.
That's right. But go write a workers' compensation account without all the fancy big services and programs, just based on who you are and the value you can bring as a person.
Are you considering a career change at this point?
Yes, drop me into big cities. But that to me is at the basis of how you approach helping employers with workers' compensation at a real fundamental level.
The great news is you don't actually need fancy PowerPoints or fancy back end services, something like that. You actually could absolutely do this just with the intellectual capital that you possess in your own mind.
I think that, I mean, to me, that's kind of where I would, all this time of researching what it takes to help a company change their thought process so they stop having injuries as being the package. That's the value that you bring in with your head.
Yep, absolutely.
Right? And so you walk in somewhere and you say, look, let me help you. Let me just, with what's in my head, guide you to how you can help yourself and get yourself to where you're paying the lowest you could possibly pay for workers' comp, because you've stopped having injuries because the people here don't want to have injuries.
The great thing about trying to approach workers' compensation from a cultural perspective is it actually requires no money. So if you're the agent, what you really need to bring is ideas, you need to bring energy, and you need to be working on the culture of your client. And if you can convince that potential buyer that you have the wherewithal, that you have the mental capital necessary to help them implement a culture change that will lead to a reduction in terms of how many claims they're having, how many injured workers they're having, I think you're in. I think that's a great way to get in the door. I also think it's a great way, once you execute that, to ensure that you have a high retention rate. And if you want to become $1 million producer, if you want to have a huge book, you can't just get in new accounts. You've got to keep the ones that you have, and you need to further monetize them.
Right, because otherwise they're going to go upside down. So I have a question for you. So how long do you think a lunch appointment takes with a customer generally?
For me, probably about an hour and a half, 2. It depends. Are they chatty? I know I am.
Right. Okay. But so I'm thinking, all right, so you can, to me, when you're trying to find the time to have this mindset, so you could either do this over lunch, or even better yet, not.
Or not. Yeah.
Okay. So lunch is fun and it's great. But if you have an hour and a half, let's say, with somebody for lunch, and let's say you redeployed that hour and a half and you took it and spent some time with them and actually gave them the map, a strategic plan on how to change the outcome of their business that would actually not just reduce workers' comp, but actually increase the profitability of their company.
I think they'd exchange that for a second cup of coffee.
Right.
Well, look, let's, I come from New York, I'm currently located near San Francisco in the Bay Area. You're not going to get a buyer from Silicon Valley or San Francisco to give up 2.5 hours of their day. That's not a solid approach. In Manhattan, forget it. No one's doing 2-hour lunches.
And it's not going to hold on to an insurance account, even if you do.
Close.
Even if they go to lunch with you.
Old school approach.
It's not going to hold
lunch
on
at
to
the country
account.
club, not viable anymore.
Right, because again, while all this stuff is going on, no matter how much they love you as a person, at one point, somebody's going to walk in the door and say, we need to change what is normal here in order to help the profitability and the competitiveness of your company.
Right. And they still may like you at that moment. They may have enjoyed working with you, but if you're a business owner, your primary mission is to do what's best for your business. And so you may have to say, Lynn, I love you. You've done a great job, but these guys over here, they're better suited to provide better value to my company. And it's my job to do that. So I'm going to make that change. And none of us want that moment to happen.
So, being a little bit competitive, I know that.
You slightly, maybe?
But that, to me, drop me in the middle of wherever.
Oh my gosh.
And that would be, what I would do is I would walk in a door and my goal would be, let me give you value right in that first meeting that warrants and merits a broker record letter. right? And that's at least
That sounds
that's the
impossible,
way
but
I'm
we know it's
thinking of it.
doable. But we know it's doable. We do it all the time.
Yeah,
It's done all the time.
So that's kind of my idea about raving fans. I know yours is, again, I mean, how you get raving fans.
I think you get raving fans in a couple of different ways. I think one, you need to present something that they haven't been receiving up to that point, right? So they may think that they've got a great insurance agent, but if you can point out to them that as nice as he or she may be, that you're going to bring value that's going to help them improve their workers' compensation program, lower costs, and actually get better outcomes for them, their employees, well, that'd be a great way to start. Or that you have specific knowledge to their industry, perhaps, that the other agent doesn't have. That's a huge place to start. So what we try to do personally is make sure that we're presenting value all the time, every interaction, and that we're honestly that we're changing how insurance is done and how the brokerage model works as far as providing value to our customers.
See, that's what I love. I mean, I love seeing the level and the perspective and the image of our industry, rise based on what we know works to help other people, to create better value for other people. By the way, we do have the top 10 high-cost work comp mistakes. If anybody wants it, they can actually get it on NDOI. Just, reply back here, and we'll send you the whole list of the top 10 things that people do that they think is lowering workers' comp, but actually makes it more expensive.
Yeah, great reference tool, both as an educational piece for yourself, but also to potentially use against your competitor.
Yeah, give to clients. That's great. So final wrapping up, I'm thinking we need a $1 million book strategy. So I'm thinking, okay, $1 million in commissions. That's 20 accounts that are $5,000.
50.
I mean, sorry. Well, no, that would be 50,000.
20 at 50,000.
Right.
Yeah.
Right. That would get us to a $1 million book. Maybe that sounds high for people to be able to choose. Okay, so you could do 40
at 25,000. You know what? I've even seen it happen at 200 accounts at $5,000. You can go at it any approach you want. But you used a great word there, strategy. I think I would ask a lot of people out there, do you actually have a strategy? Could you articulate that strategy?
Again, you can't hit a target you don't have.
Cannot hit a goal that you don't have.
But I mean, whatever the math, if you want $1 million and you say, okay, 20 accounts at 50,000, many people would say that's revenue. And people would say, oh my gosh, that's $500,000 accounts, or, that's really large.
I work with $1 million producers all day long. It's absolutely doable.
Yeah. Absolutely. And if you start smaller, but the reality is if you figure out the number as your average and then begin to have that conversation that isn't around the rates, but it's really around strategy for their company to be more profitable and more competitive.
It's not about price. It's about value, both from the value that you're bringing as the broker, and if I'm the buyer, if I'm the person who owns the plumbing company, the contractor, the hotel, what value is being given to you? You're certainly paying a lot of money. You're paying a lot of premium. As a derivative of that, the agent's making a pretty significant amount of money. What are they doing to earn that money? What value do they bring to you? Quite honestly, I think you'll agree with me here. The placement is probably the least difficult thing that we do. Putting them with an insurance carrier, I think most brokerages can do that.
Well, they can. But, let me just say here, too, the partner that you pick as an insurance carrier.
Huge piece.
It is a huge piece because the idea of whether a carrier is really a specialist in comp and whether they're really in it and they're focused on it, or whether it's, something they just got into in the last couple of years. They may not be, these are all pieces that have to be looked at.
Such a good point, Lynn. I don't think agents typically think enough about the partner that they're placing their client with other than price. I think you really have to ask yourself, what type of services does this client need? Can my carrier partner provide them? Am I going for a 1 or 2 year relationship here? And I think the answer probably is no. But if you've gone with the low price of the day, is that really going to be a viable strategy for you to have this account from year 1 to 10? Because really you want to keep your account as long as you can. It's probably not even profitable to year 3 or 4 to the agency?
It takes a while. The other thing I just was thinking, so I'm out there and I have $50 in my pocket and I'm trying to write an account.
We took that cab, so you're down to about 15.
Right, that's right. So, but I'm thinking to myself, the technology. It just came to my mind.
Huge.
What about the technology? I don't have to be a ginormous brokerage to have access to technology. I mean, right now, today, there are platforms that individual brokers can hook into where they can actually give technology to clients.
What a great opportunity to separate yourself from your competitor. We work with a number personally of great back-end providers. I'm an environmental health and safety oriented person. So we've chosen Succeed Management as our preferred provider. Great company, great tools. And you're right. It's the brilliance of it is you don't need to bring that to the table in terms of a personal delivery. It doesn't need to be a resource that your agency itself is bringing. What it does require is an investment on your part. But once you do that and you bring that to your client, it's so sticky. They don't want to lose all of the services provided you've carefully chosen the technology partner and that it provides the right value.
You may want to mention like what kind of services you get. And like I said, there's many, but
it's funny that you asked me that. So we're just about to hit February 1st. So certainly for us here in California, we're about to post our OSHA logs if you're an employer. So if I was a business owner, wouldn't it be great if as I was reporting my claim through my technology, not the carrier's website, but through the technology that my broker provided, it was also filtering information into my OSHA log. So everyone is scrambling at the end of each year to try to figure out, oh my gosh, what is an OSHA recordable? What was I supposed to put in this log? How many hours did Bob miss from work?
So that's the key. So the information, when you're using technology, the information that people are keying into that first report of injury form normally or calling over the phone or whatever it is, if that information gets captured, not only can it be filtered into the OSHA log, but all the trending reports that anybody could ever want.
Amazing data mining. And you can even do it even if it's not a claim. You can even do it with near misses if you've chosen the right technology partner. Obviously, if you can use your technology to figure out what type of near miss incidents are occurring, but near misses are an incident where perhaps someone tripped and was not injured, for example. You can target that before you even have a real injury or have a need to file a claim. Amazing value that you can bring to the table as the broker. It just requires a little bit of investment and a little bit of knowledge.
Yeah, I think the other thing is the heads up on those experience modifications because so many people get blindsided 3 weeks or so before their renewal. Oh, bad news. Here's your new experience mod. I like to think it's, a no-brainer that you're going to know 4 to 6 months before what you think it can be, or even rough ideas of years in advance, like, okay, where you're at right now, this is where we expect it to be. This is so helpful. I actually heard a story about someone who proposed great services to a client, did the great services, did trainings and helped them with all kinds of things. But just as they got to the renewal time, the experience mod came out and it was much higher than anybody ever expected. But the new broker, and then of course the old broker was out, but the new broker never gave them a heads up that even though they're doing all this stuff, they had some, bombs that were about to go off. And so this mod and
that's a terrible way to start a relationship.
Right, the broker lost the account before I ever got it because there was no heads up.
But what a great opportunity there, isn't it? So if you have the right technology and you have the right knowledge, you have the ability actually to, work with what's called the unit stat period. And you can actually project even, 5 months before renewal, what the next experience mod is likely to look at. I'll tell you, Lynn, if you're a contractor, a roofer, huge, because you need to factor in your X mod and what that's going to do to your premium, to your bidding. So if you're a successful contractor and you're out there and you've got all these jobs, but you underbid them, not knowing that your workers' compensation premium was going to go up, that's going to get ugly. And ultimately, your hostility is going to be directed in a certain way. And I guarantee you that leads to the agent at a certain point. Wow. Great opportunity to both retain business by being able to tell them that information. Interestingly, I've seen it used really effectively also as a prospecting tool.
So David, believe it or not, we are out of time.
Lynn, as always, it's been so much fun. For those of you who are listening, please continue to send us your questions and comments. Our email is executiveservices@ndoi.com, or you can post your comments directly on our YouTube video.
So that's executiveservices@ndoi.com. Thank you for listening. Now go write some insurance.
Today's podcast is sponsored by Chubb Group of Insurance Companies, Zurich Insurance, CompZone, and Succeed Management Solutions.
The National Directory of Insurance is committed to doing all we can to up our game with the people we serve. So if you know a $1 million producer who we can learn from, please let us know by emailing us at executiveservices@ndoi.com. That's executiveservices@ndoi.com.